Good news for health insurance consumers that may have to pay back a whole bunch of excess federal premium tax credit. Hi, I'm Kevin Knaus with InsureMeKevin.com, and if you are one of the unfortunate individuals that made too much money in 2020 and the tax return, your federal income tax return, says you need to repay a whole bunch of the federal excess health insurance premium tax credit, there is good news because the American Rescue Plan has suspended the repayment of that excess premium tax credit from Form 8962. Now, the IRS has released information, but there's still a whole bunch more going on. And essentially what they're saying is if you have already filed your taxes, do not file an amended tax return because that'll kind of slow things down. So you want to wait, and the IRS has given taxpayers until May to file taxes. This is being recorded as of March 23rd, so who knows, there might be another extension. But that's going to help some people reconcile that. And there is also the issue of the $10,000 reduction in the income for unemployment benefits. And again, the IRS is saying, wait, hold on. We need to develop more information. We're looking at the American Rescue Plan and seeing how that all plays out. But that is good news. I've had calls from several different people who have said, you know, with the unemployment insurance, I went over 400%. Now I have to pay back all this federal subsidy. And oh my gosh, what am I going to do? And it's been kind of a nightmare. And taxes, yeah, it just gets worse in terms of the frustration factor that people are having to go through. Now, if you're in California, there's another layer of confusion because California has its own version of the premium assistance subsidy, which if you were over 400% of the federal poverty line, California chipped in some additional subsidy to reduce the health insurance premiums. Now, in 2021, the federal subsidies will swamp the state subsidies, so they will no longer become an issue. However, the problem comes in is because we do not know what California is going to do at the moment. But for some people, they estimated their income, like on this particular example here, a couple estimated $55,000. They got a $21,115 in federal subsidy. Their final modified adjusted gross income came in at $75,000. So technically, under the old rules, they had to repay all of the federal subsidy they received. But California kicked in an additional subsidy of $16,037 to help ease the pain. Well, now, at least for 2020, the repayment of that $21,115 for this particular couple has been suspended. We do not know what's going to be happening in 2022, but at least it's been for 2021 tax year, but we know it's been suspended for 2020. So if the couple doesn't have to repay the $21,000 and they get the $16,000 from the state, I don't know how California is going to reconcile that. And we are still waiting for the Franchise Tax Board to issue guidance in that regard. So it's kind of really confusing as to what's going on. So as of March 23rd, you know, we're just waiting for more information from the state and the federal government. And there's going to be additional subsidies in 2021 for consumers, things the health insurance being capped at 8.5% of the household income for the second lowest cost silver plan. You can read about that on this particular YouTube post that I did a couple days ago. So hopefully that explains a little bit, gives you a little bit of breathing room that you don't have to repay all of those subsidies that you may have inadvertently created just because you work too much, you got a contract, or you receive too much unemployment benefits. So for InsureMeKevin.com, I'm Kevin Knaus. If you have any questions, comments, go ahead and leave them down in the comment section, or you can go to my website and shoot me an email. All right, take care.